PM Tan Sri Muhyiddin Yassin has announced a total lockdown of the country from June 1st to 14th, where all sectors will not be allowed to operate, save for economic and service sectors deemed essential to be listed by the National Security Council. According to his official Facebook, Muhyiddin says this decision was made given the current situation, where today marks the fourth consecutive day that new daily cases have climbed to new heights. As such, healthcare capacity around the country to treat COVID-19 patients has come under strain. According to the announcement, if Phase 1 of the lockdown manages to bring cases down, the government will then implement Phase 2 that will allow the opening of a few economic sectors that don't involve mass gatherings and where social distancing can be observed. This phase will last for 4 weeks. Once Phase 2 has ended, Phase 3 will be similar to the current MCO, where social activities will be forbidden, but almost all economic sectors will be allowed to open. Following this decision for a total lockdown, the Ministry of Finance will reveal an assistance package for the people and the affected economic sectors in the near future. New COVID-19 cases today came in at 8,290, up from yesterday's 7,857, according to Health DG Tan Sri Dr. Noor Hisham Abdullah. Recoveries numbered 4,814 today, while there were another 61 deaths reported, bringing the death toll to 2,552. Malaysia has frantically been working to ramp up its national vaccination program, with 1.725 million receiving their first dose, while 908,012 have gotten both doses. FGV Holdings slipped into the red for the first quarter of FY21, posting a net loss of 35.4 million compared with a net profit of 134.9 million recorded in the immediate preceding quarter. This was due to lower contributions from all its business segments. Quarter-on-quarter revenue declined by 15.3% to 3.39 billion. However, on a year-on-year basis, losses actually narrowed compared with the net loss of 142.3 million reported in the first quarter of FY20. Revenue was 22% higher year-on-year, thanks in part to higher crude palm oil prices. On its prospects, FGV says that while it expects CPO prices to remain high, the operating environment in the plantation sector will remain challenging due to the COVID-19 pandemic and tight labour situation. As for its sugar business, FGV says it remains optimistic on its turnaround plan and achieving sustainable growth with additional focus on export. Pharmaniaga says it remains cautiously optimistic about recording a better performance in the coming quarter as it keeps the focus on operational efficiencies, fiscal discipline and progressing in its vaccine business. The group also echoed what MP Khairi Jamaluddin said yesterday, that it is poised to fulfill its contractual obligation towards the government by distributing 12 million doses of the Sinovac vaccine in June and July. Group MD Datuk Zulkarnain Muhammad Yusof says it has proposed to the government to supply both finished as well as filled and finished vaccine to help to expedite the completion of the National Immunisation Programme with the aim of achieving 80% herd immunity by end 2021. These consist of 5.09 million fill and finish as well as 6.9 million doses of finished vaccine and intends to import another 10 million doses of finished Sinovac vaccine. For the first quarter of FY21, Pharmaniaga saw a 3.3% increase in net profit to 23.1 million due to lower finance costs. However, revenue dropped 3.2% to 793.5 million as its Indonesian business declined due to the pandemic. It also declared an interim dividend of 4 cents per share. PPB Group's first quarter net profit spiked 115% to 402.2 million thanks to higher contribution from Wilmar International and higher profits from grains and agribusiness. Revenue improved to 1.12 billion from 1.07 billion ringgit. No dividend was declared for the quarter. PPB said the contribution from Wilmar more than doubled to 345 million, while its grains and agribusiness grew 130% to 124 million. However, PPB's film exhibition and distribution segment recorded a loss of 25 million, dragged by prolonged cinema closures, reduced admissions and deferment of box office titles thanks to MCO 2.0. Going forward, the group says the pandemic will continue to weigh down on both its film exhibition and distribution as well as its property segments. PPB says this will not be the case in its other main business segments, which are mainly involved in the production and distribution of staple food and services, where they are expected to perform satisfactorily. Rubberex Corp Malaysia's net profit for the first quarter surged ninefold to a record high of 86.6 million from 9.26 million previously on higher demand and higher average glove selling prices. Revenue for the quarter more than doubled to 175.2 million ringgit. No dividend was declared for the quarter. It should be noted that the reported profit included a gain of 5.9 million from the dissolution of Rubberex Hong Kong. However, even with that caveat, Rubberex's gloves consistently saw strong demand, and this was helped by improved production efficiencies. MD Koo Ling Chen said in a statement that all 5 double formers nitrile disposable glove production lines from the new factory have started operating since late last year, and total output has increased from 1 billion pieces to 2.5 billion pieces per annum. Rubberex is poised for expansion at its new 11.9-acre manufacturing site in Perak later this year, which will boost its production capacity to 10 billion pieces per annum. Rubberex says its order book has already been fully taken up for the rest of the year.